Mswati inkosi ithula akayithathe akahambe nayo akayithathe yedenza bakhe
hours. It is Tuesday, the 23rd of June. You are watching Eswatini TV, Sibuko Samaswati, and this is Market View. On the program today, the tourism experience is getting a spotlight as it begins long before a visitor explores our mountains, our culture, or our wildlife, and it starts the moment that they book accommodation. Now, in a bid to strengthen quality assurance, to build international confidence, as well as position the Kingdom of Eswatini as a competitive destination, the Eswatini Tourism Authority has launched the National Accommodation Grading System. It is an initiative that is underpinned by the Grading of Accommodation Establishments Regulations of 2012. And it seeks to standardize hospitality offerings as well as drive excellence across the sector. Vusi Norman, the Chief Executive of the Eswatini Tourism Authority, in conversation in the program later on. But before that, per usual, we'll start by looking at our news. Stay with us. In our first story, total value of 4.9 million emalangeni in loans has been approved under the Agricultural Mechanization Project, a partnership between the government through the Ministry of Agriculture, the United States Embassy, as well as Standard Bank Eswatini. It was officially launched at the end of last year. Speaking during the interview, Zweli Vilagati, head of technical services at the Ministry of Agriculture, said agricultural mechanization is key to unlocking agribusiness growth, to boosting productivity, as well as strengthening Eswatini's food sovereignty through increased local food production.
The Agricultural Mechanization Initiative is based on a government-led 250 million emalangeni project supported by the U.S. Embassy and Standard Bank, with the aim of strengthening food sovereignty through improved access to modern farming technology. Head of Technical Services at the Eswatini Agriculture Development Fund, Zweli Vilagati, gives an update on the performance of the project.
In this particular partnership, Standard Bank contributes 75% of the total value of the equipment, which is the tractor, together with the other implements that are actually required to push the business or the project of the private sector owner. And then EADF contributes 15%, and the farmer is expected to contribute only 10% of the total value of the inputs. And then from the launch of the project, we saw around 25 applicants who submitted for review. And then out of the 25 that were submitted for review, only 8 were approved, and they made it through to be financed. And then the 17 which didn't make it, it was due to a number of factors, one of which was the issue of the viability of their business proposals. But then from the 8 which made it through, 4 disbursements were made, whereby 4 of the applicants took the tractors and equipments, and the other 4 decided not to take the equipments because when we started the application process, the season was already going through. And then when they were trying to do the calculations, they saw that taking the tractors early, yet the season was almost finished, it was not going to make business sense for them. So they decided that they would take the tractors during this coming plowing season. From what we have dispersed, around 900,000 was from EADF, which is the contribution of 15% to all the applicants. And then the total value of the applications or the loans that were disbursed is around 4.9 million. That is from Standard Bank. And then currently we are trying to work with Standard Bank to look through the 17 applicants which didn't make it through, to see what we can do to assist the applicants to ensure that their business proposals are viable.
As part of the initiative, Standard Bank Eswatini, in partnership with the Eswatini Agricultural Development Fund, is introducing 250 mechanization packages targeting the National Maize Corporation and private sector owners. The head of technical services has also confirmed that applications for funding remain open throughout the year for applicants who present viable and sustainable business proposals. Reporting, Nelson Ngamandla, Vuminkosinzini Sambabane.
Here's a script for you. Rising global fuel prices have driven up Eswatini's energy import bill, with imports of fuel and electricity reaching 763.4 million emalangeni last month. Now, this represents a 2.6% increase when it is compared to the previous month. On a year-on-year basis, energy imports rose by a significant 37.5%, and that is mainly due to higher fuel prices on the global market. All these figures are contained in the latest Economic Development Report for April and May this year. And meanwhile, imports of machinery and electrical equipment totaled 313.5 million emalangeni, and that reflects a 13.5% month-on-month increase. However, this was 11.1% lower than the figure recorded the same time last year in May. Food imports also recorded strong growth, increasing by 37.9% month-on-month to reach 356.5 million emalangeni. The increase was driven by higher imports across most food categories, with the exception of fruits and vegetables. Despite the monthly increase, food imports fell by 11.7% when compared to the same period last year. And this is attributed to lower imports of live animals, live trees, and edible fruits and nuts, according to the recent Economic Development Report published by the Central Bank of Eswatini. And that marks the end of our business news segment. We are in conversation with Vusi Norman Dlamini, the Chief Executive of the Eswatini Tourism Authority. And this follows the launch of the Eswatini Establishments Grading System. Stay with us.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
Welcome back. Our Enterprise Watch segment now. A week ago, the Eswatini Tourism Authority launched the Eswatini Establishments Grading System, which is a major initiative that is aimed at strengthening quality standards, as well as ensuring that the tourism sector continues to grow and thrive. Now, with tourism playing a vital role in the country's economy, contributing approximately 23.9% to the GDP. That is according to the 2024 National Labour Market Skills Project Skills Anticipation Report. The need for strong quality assurance measures has never been more important more than now. Now, the new grading system is expected to enhance service excellence. It is also meant to improve competitiveness as well as position the Kingdom of Eswatini as a premier tourism destination. Now, to discuss the significance of this initiative as well as its impact on the future of the tourism industry, Vusi Noman Dlamini, the Chief Executive of the Eswatini Tourism Authority. Thank you so much for always affording us your time, Gosi. We really appreciate having you on the program.
Thank you, Mguni, and we also appreciate the opportunity as the ETA.
It's a great development, but for a lot of viewers, this is a buzzword, it's a new word at the same time. National Establishments Grading System. What exactly is it? And tell us about its significance as well as, what it really aims to achieve for the tourism sector.
Okay, thank you very much, Sfiso. Like you said, it's a buzzword, but if I were to put it in simpler terms, I think people that are familiar with traveling, they will know that if they are traveling from country to country, the places where they stay, the hotels, the lodges, the guest houses, would actually be rated in terms of whether it's a 5-star, a 4-star, a 3-star, a 2-star. That is what it is all about.
Oh. Okay.
Yeah.
You just broke it down simply.
Yes. So essentially, this is significant for us because I think when we are talking about tourism, I think like we're saying it's a national grading system, but it's adapted from international standards because if you're talking about the star rating, that's what we have adopted as a country. If you're talking about the star rating, the rating is such that it is based on what international best practice is. So it means if we are going to have a 4-star hotel, for instance, in Eswatini, it needs to compare pound to pound, if I were to put it that way, with a hotel in the UK that is a 5-star hotel. This is so that when I'm a tourist, I'm traveling from wherever in the world and I'm deciding that I'm going to stay in a 5-star hotel and I look for that 5-star hotel, I expect that the standard and the quality and everything is going to be what I expect in another country.
Absolutely, that makes sense. I was just watching the latest Ralph Lauren, I believe, spring edition, and it was hosted at the Palazzo Hotel. And, for a lot of people, they don't know that there's an establishment that is almost in all developed economies. And in Eswatini, we have a Palazzo, even though it is still under construction in some areas. So you're telling me that someone who, let's say Coleman Domingo, who is a 5-star actor, slips at the Palazzo for this launch and wants to travel to Eswatini the next week, they should expect standards that are at par with the ones that are wherever they are in Europe.
That's exactly what we are trying to do here. That's exactly what the star grading is all about. That's the national grading is all about. That is so that there is that comparability, so that our tourists, when they travel from whichever country, they don't get to see or to find surprises. For instance, if they know that everything has been standardized, like we are saying that we are doing this in line with our own national grading regulations. The tourist will know that when they get to this point or they get to this establishment, it's going to be the same kind of treatment. It's going to be the same type of bed, for instance, same type of sheets. It's going to be pretty much similar to what they actually experience elsewhere, as long as it is the star that they've chosen.
Absolutely. You speak of our own grading regulations, and indeed, when I learned that the grading is backed, by legislation. Why is that legal foundation important for credibility as well as consistency across establishments?
I think we've hit it on the nail there because you've said it's for consistency also. The legislation is for consistency and also for credibility, because if you're doing things like this here, like the national grading of establishments, you don't want someone that will just wake up in the morning and decide how things are supposed to look for a 4-star, for a 5-star or like that. So you need the grading guidelines that's going to tell you that, so that the assessor, when they get to start the process to assess the establishment in terms of whether it's a 5-star or it's going to be a 5-star or 4-star, they are applying that across exactly the same way. I think I just want to also mention that as we do that, if we go to the regulations that are actually used as a guideline for the grading, you will realize that you will not compare a hotel with a guest house, for instance.
Absolutely.
You will not compare a lodge with a hotel, because these are all different type of establishments. So you will find a hotel that is a 5-star in the hotels, and then another category will be category of, let's say, guest houses. You'll find a 5-star guest house, because there are people that are coming into the country, people traveling, that prefer to stay in a guest house. So they need to know if the guest house that they've chosen is a 5-star guest house or is a 5-star, it's a 4-star guest house.
Now, walk us through the assessment process. What criteria do the assessors examine, before awarding a grading?
Yeah, I won't go into detail of it, because the 247-page kind of a checklist that we are talking about here.
Yeah.
So essentially, there are so many things that they would be checking for. But like I've mentioned, the first important thing that happens is that if you are interested in the grading, we're saying it's a voluntary grading. It's not necessarily something that we force on establishments' throats. It's our law is such that it is actually voluntary. I mean, it's similar to what happens in other countries as well, where grading is actually voluntary. It's not really compulsory, except for a few countries. But if you go to the big countries, you find that it is actually voluntary. But establishments do it because they know the value that it actually adds to the tourism sector, and particularly the accommodation stock. Now, the starting point is that we call for establishments to make applications, so they fill in that application form, they bring it to us. Now, when you are applying, you already would have thought in terms of which star you believe your hotel is. For instance, if you are applying for a 4-star, you will indicate that I believe that I'm a 4-star. So the role of the ETA is to then come in and actually do an assessment of whether you do fall into that 4-star or not, by doing all the checks and balances. It would be from the beginning, would be from entrance. As you enter that establishment, what do you find? As you get to interact with the people. How exactly are the people treating you? I think you've seen in big hotels or in 5-star hotels where there's a welcome drink and stuff, and if that is not there, probably that may mean eventually you will not get what you have actually applied for.
I imagine even the food itself should say something, should communicate something there in terms of the grading.
It's all those things, going down to the rooms as well, the type of sheets that you are actually using, the bathroom setup, and everything. So they will be looking at the team looks at so many things that are actually supposed to be ticked for you to be then determined whether you are a 4-star, 5-star, 2-star or 3-star, whatever.
So I'm trying to reconcile two realities here that you mentioned. One is that, and you do say, as in many other developed economies, it is not compulsory, it is not mandatory, for lack of a better term there. At the same time, I'm just, because you are saying you are making a call to let's call it accommodation providers to come for the grading, because it's essential for our tourism industry. How do you communicate to someone who is afraid they may not necessarily meet the required standards there? Because some of them may chicken out, and I see how that could hurt this whole process.
Yeah, that's very important as FISO, because what we have then put in as an adjustment to our own way of doing things is that if you're interested in doing the grading and you are scared, like you are saying, that you may actually not meet the standards that you are expected to meet if you are going to be that grade or that category of an establishment in terms of the star, we then say you are allowed, and we do this as an entity to encourage establishments. You are allowed to inform us that you intend to grade. You don't apply yet, but you intend to grade, and you would want us to do some pre-assessment. Now, when we do that pre-assessment, you will mention that I believe that I'm a 3-star, and then we do that pre-assessment, same way as we do the actual assessment, and we give you that report and say, we believe that if you want to be a 3-star, you should actually improve 1, 2, 3, 4, 5.
That's great.
And then you can actually decide whether you still want to go through the grading process, because maybe you will have resources to actually improve some of the things. Or you would say, okay, if you're saying I'm not a 3-star, I'm a 2-star instead, I think I'm happy to take it. And then if you're happy to take it, then whilst you improve, we'll then give you what we will call a conditional rating or grading, where we are saying you are a 2-star, but if you improve 1, 2, 3, 4, 5, you are going to then improve into a 3-star.
Right.
Remember, this process is done annually, again, because establishments either they improve, they either improve or they will go down. So we need to actually check them time and again. So in the following year, if we have given you this kind of conditional, although we will give you a shorter period to improve some of the things that we have asked you to improve, we will then do the actual grading later on, and then you might find that you actually now fall into the category that you, or into the star rating that you aspire to.
So everybody gets to win. Because in my head, I just love always asking myself, who gets to win from such an initiative? And in my head, I see how, tourists get to win, travelers get to win, the tourism sector itself wins, even the establishments themselves win. So no one has anything to lose here, really.
We believe that as an entity, if we improve the quality of our accommodation stock as a country, it's a win-win for it's a win for the country, first of all, because we need to take the country first. It's a win for the country from a tourism perspective, but it's also a win for the establishments, because Sifiso, the one thing that I think I want to mention is that we recently, Isme just recently launched the Eswatini Palazzo that you referred to as well, the convention center. This convention center, we is going to attract some conferences from abroad. Now, when these conferences are happening, the reality is that there will be spillovers for other establishments around. And ordinarily, if some of the big conferences, they will actually request, how many 5-star hotels do you have? How many 4-star hotels do we have? We will not be able to say that as a country if we are not implementing this national grading system. But if it is implemented, then it's easy for us to actually tell which ones. And some entities, you'll find that they will only want to preferably work with those establishments that have graded through the national grading system. So it's a win for them.
Yeah, as they should. And I think by way of a great case study, as the hotel is being, under construction, we did have an EU or ACPS summit, and those spillovers that you speak of were certainly lived and were certainly felt. A lot of the hotels were fully booked there. Thank you so much. Vusino Mendlamini, Chief Executive of the Eswatini Tourism Authority, unpacking the establishment's grading system. We have our market analysis with Sanele Sbia. When we return, stay with us.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Watching Market View, and now our market analysis as we draw closer to drawing the curtains close. Sanele Sbia, our economist, live on our Zoom video link now. Sanele, very good afternoon to you. Center stage belongs to you now. Please take us through the numbers.
Thank you, Mr. Ngumalo. A very good afternoon to you as well, and good afternoon to our viewers. So what we're seeing in markets today, Mr. Ngumalo, is a sell-off following, concerns over stretched valuations of those tech companies. Remember, the bull that we saw earlier on in the week and late last week was largely driven by those tech stocks, gaining a huge momentum. So right now, those fears of those Proptignegium valuations within those stocks have actually come back into the markets. Remember, just last week we saw SpaceX listing, and they got $1 trillion valuation, which in itself was not a true indication of what the company is worth right now, but potential of what that company would be worth in the near future. And now that's what we see. It's a trend around these AI stocks, that we find that there is going to be that rally, and then it's going to be followed by a bit of a reality check to say, no, when are we getting to profitability, and when are we getting to seeing the money coming out of these tech stocks instead of just right now betting on promises and what it could be. So what we're seeing is the Dow Jones Industrial Average is up 148 points in today's trade. The Nasdaq Composite Index, which is tech heavy, has lost 351 points in today's trade, and the Standard & Poor's Index of the top 500 companies in the US has lost 27 points in today's trade. Now, you couple those valuation fears with the 10-year yield showing that the cost of borrowing remain relatively high in the US, and then the expectation of an interest rate hike maybe in the next Fed meeting. Now we're seeing markets coming into and valuing those into their spectrum. And going into the euro market, again, those valuation fears are rippling through the markets. London is down at 36 points. Germany is down 282 points, and Paris is down 59 points. And then also there is a lot of fears there and a lot of concerns around the sentiments by the president of the European Central Bank, Christine Lagarde, who stated that, the ECB is not really chasing interest rate neutrality, but rather they are concerned about, ensuring that inflation stays at bay. Now that shows that the ECB is not ruling off any prospects of an interest rate hike in the next coming meeting, depending on how inflation plays there. And then in Germany, in Japan again, and the Greater Asia region, the Nikkei is down 2,565 points in today's trade. The Hang Seng in Hong Kong is down 432 points. And the Shanghai Composite Index is down 56 points. Again, those valuation fears around the AI. And what we are faced with right now, Mr. Ngumalo, is a market that has to take a reality check and say we are moving past the Strait of Hormuz debacle. We are moving past that oil shock debacle. Now let's come back into markets and let's look and study the fundamentals in the markets and what are they telling us. And then we are back on that thinking, saying those AI stocks are heavily valued. And then in the Johannesburg Stock Exchange, we are down 1,345 points. Again, it's those interest rate expectations and those tech valuations domestically. The Eswatini Stock Exchange remains subdued. Gold is trading at its year low, 4,143.50 dollars per ounce, and the price of Brent crude cruising nicely down to the $75 per barrel mark. We are today sitting at $77.76 per barrel following the peace deal. And in terms of the currencies, the Lilangeni is relatively weak today, given those tech stock valuations and those fears. We are trading at 16.47 against the dollar. We are trading at 18.78 against the euro, and we are trading at 9.81 against the Japanese yen. Thank you, Mr. Ngumalo.
Appreciate your time on the program and your insights. Likewise, Analyst B, our economist, taking us through numbers from Wall Street as well as some of the market numbers here at home. We come to the end of our program today, and we certainly hope that it was insightful for you and that you will enjoy the rest of your day, because we will see you on Thursday on Market View. Goodbye.